Imagine buying a stock before it doubles, before financial media starts talking about it, before social media becomes excited, before the crowd arrives. Sounds impossible? Not exactly. Professional traders spend years studying one specific event, the breakout. A breakout is one of the most powerful events in financial markets. Some of the largest moves in history began with a breakout. But there is a problem. Not every breakout succeeds. Many fail. Many trap investors. Today, you'll learn how professionals think about breakouts and how they separate opportunity from danger. Let's begin. A breakout occurs when price moves beyond an important level, usually support, resistance, or a major chart pattern. Think back to our previous lessons. Support and resistance represent areas where buyers and sellers have repeatedly made decisions. When price finally escapes one of these areas, something important may be changing. Supply and demand are becoming unbalanced. One side is gaining control. The breakout is simply evidence of that shift. Part 2. Why breakouts happen. Imagine compressing a spring. The more pressure builds, the more energy becomes stored. Eventually, the spring releases. Markets often behave similarly. Price consolidates. Buyers and sellers battle. Pressure builds. Volume contracts. Volatility decreases. Then suddenly one side wins. The result can be a powerful breakout. The longer the consolidation, the more significant the breakout may become, because energy has been building beneath the surface. Part 3. The role of volume. Now we arrive at one of the most important concepts in breakout trading, volume. Remember episode 9. Volume is participation. Volume is conviction. Volume is evidence. A breakout with strong volume often carries more credibility. Why? Because more participants support the move, more buyers, more institutions, more conviction. A breakout without volume can still work, but professional traders become more cautious, because price movement without participation can be fragile. Volume is often the fuel behind the breakout. Part 4. The biggest mistake beginners make. Most beginners make the same mistake. They wait, they hesitate. Then they see the stock exploding higher. Fear of missing out takes over. They buy emotionally, often at the worst possible moment. Professional traders understand something different. The best opportunities are usually planned before the breakout happens, not after. Professionals identify key levels, watch volume, study market structure, then prepare. They do not chase excitement, they prepare for opportunity. Part 5. The false breakout trap. This is where many traders lose money. False breakouts. Sometimes price moves above resistance. Everyone becomes excited. The breakout appears successful. Then suddenly price reverses. The breakout fails. Traders become trapped. Why does this happen? Because markets are designed to transfer money from the impatient to the disciplined. Many participants buy because they see movement. Professionals often wait for confirmation. Remember this: a breakout itself is not enough. You must evaluate the quality, volume, momentum, trend, market conditions. Everything matters. Part 6. The retest. Now let's discuss one of the favorite techniques of experienced traders, the retest. Imagine resistance breaks. Price moves higher. Then price pulls back toward the breakout level. Old resistance becomes new support. If buyers defend the area, the trend may continue. This retest provides valuable information. It allows traders to see whether demand is still present. Many professionals prefer retests because they reduce emotional decision-making. Instead of chasing, they wait. Instead of reacting, they observe. Patience becomes an advantage. Part 7. The psychology of breakouts. Let's talk about psychology. Why are breakouts so powerful? Because breakouts create emotion, fear of missing out, excitement, hope, greed. At the same time, short sellers may be forced to cover positions. Investors waiting on the sidelines may rush in. Institutions may increase exposure. All of these forces can amplify momentum. The breakout is not simply a technical event, it is a psychological event, and markets are driven by psychology. Part 8. How professionals think. Professionals rarely ask, "Will this breakout work?" Instead, they ask, "What evidence supports this breakout? What is the trend? What is the volume? What is the risk? What is the reward? Can I manage risk if I am wrong?" This mindset changes everything. Professionals do not need certainty, they need probability, and probability comes from evidence. The biggest breakout lesson is simple: do not chase, prepare. The market rewards preparation far more often than emotion. Part 9. The big lesson. Identify important levels, study volume, wait for confirmation, manage risk. And remember, not every breakout succeeds. That is why discipline matters. Homework challenge. Open 5 stock charts. Find 1 successful breakout, 1 failed breakout, 1 breakout with high volume, 1 breakout with low volume, 1 breakout followed by a retest. Ask yourself, what evidence existed before the move? Train your eyes to recognize quality, not just movement. Today you learned one of the most powerful concepts in technical analysis: breakouts. Tomorrow we'll study pullback trading. Subscribe to Wealth Entertainment 21. Turn on notifications. And remember, amateurs chase breakouts, professionals prepare for them. I'll see you in episode 14.